Good morning, everybody. It's Monday morning. Welcome to another episode of Coffee with Friends, where we talk about all the stuff that hopefully matters to our future. Thanks all for coming, everybody. Mando, how are you today?
Yeah, therapy with friends. It feels like every single week, doesn't it?
It's like,
It's another week of therapy for us.
yeah, the clubbing over the back of the head snuck up fast and hit us hard. But anyway, we'll try and see. We'll try and break through what we can make of this situation we are in right now. And of course, markets continue to be weak. Tariff tantrums are back. We've got fighting by, using ice hockey as a proxy between US and Canada, and then the US and Mexico with cartels. And then there's Iran. There's a lot of bumpiness out there in the world, and other rumors too we'll get to in a minute. CTO, how are you this fine day? It's getting dark outside.
Fantastic. Looking forward to today.
Yeah, it's funny because I always laugh. My sun is coming up where I am and it's going down where you are. So it's kind of interesting. Anyway, Marty, Satoshi. Hello, Marty. Earth calling Marty. You're muted. Dealing with your napkin. Marty's broken. Anyway.
Yeah, can you hear me now?
Yes, you're back.
I'm good. Everything good, as expected. Lower liquidation level was 65,500. That's pretty much where we came to.
Some people actually believe that this kind of 65-ish could be a floor. We'll get to that as well in a minute. But it was refreshing, at least during the night, to see the bounce. Sunday, the sell-off happened a little earlier than expected. Normally, there's a little run into Sunday, and the sell-off comes Monday. But anyway, let's break it all down. This one is called generational buying opportunity. And that term was the term used by Mando last week. And everybody's clinging to it, thinking, whoa, hang on, let's drill into this a little bit. That gave people hope, and hope is not a strategy, Mando, but do you want to double click into that a little bit when you said that last week?
Well, I think you've got to talk about time periods here, but it does feel as though this is going to be an obvious buying point. Like, the sentiment is really far down at the moment. We're touching upon that 200-week moving average. We're not far from it. So your downside is kind of capped from here, although sometimes we drift slightly below it during a bear market. And my view now is that we're approaching the world where people are starting to see potentially the deflationary aspects of AI here. And that you're going to see, in response to that, I think you're going to see massive money printing. So I think that's why you're starting to see gold rally, and I do think that will catch up with Bitcoin. It's just we've been caught in this, what seemingly is what Marty's been talking about, what all these correlations look like. We've been caught up in this SaaS correlation trade, which has dragged us lower, but it does seem like an obvious opportunity, and I don't think the quantum threat is anything to really be worried about. So I think you'll just look back at this period in a few years, and it'll be like you should have obviously been stacking. At the same time, it felt terrible to be stacking between 17 to 25K. It was like, oh God, like, is this ever going to happen? And then you look back and go like, well, that was just so obvious. Why are we not buying as much as possible? I think it'll be the same here.
Yeah, well said, Mando, and I agree with everything you said. CTO, a huge part of investing is psychology, and markets are designed to take wealth. I think Warren Buffett said wealth from the impatient and give it to the patient. And right now, people are feeling like all hope is lost. Like literally everybody's throwing in the towel on Bitcoin. And I retweeted a tweet I sent exactly 2 years ago where the price was $42,000. It was 42,222, a whole bunch of twos. And I thought the twos were funny. So I just it was exactly 2 years ago, the price was 42K. And right now we're 66K. And people are still like, I don't want to say advice, but how would you help them with therapy, like Mando said at the beginning? Because becoming a coffee with friends / therapy with friends, is all hope lost? Or is it, like Mando says, everything is fine? You're going to look back in this period and wish you bought more.
Yeah, I mean, when you do the right thing, whether it's buying or selling, and if it's actually the right thing, you always feel like an idiot doing it. It's exactly like Mando said, like if you were buying at the previous bottom, you felt like, what am I doing? This is crazy. What am I really doing? And if you were selling near the top, this time you also felt like an idiot, like obviously I must be wrong somewhere because everyone's saying it's going to go higher. So I think exactly like you're saying, James, people do seem very depressed and loss of hope here, and that is a bullish sign, because unless you're going against the stream, you should be worried. If you're doing what everyone else is also telling you to do, that's when you should be worried. So I feel if starting to look for entries now when everyone else is quitting, yeah, that's the right place to be. That's the right state of mind. And
it's funny because people are euphoric when the bull market is heading to a top, and I always get really, really nervous at that level, and I get excited when things are kind of crashing down. So it's like psychology is like the reptile brain is in reverse.
Yeah, you have to kind of realize that the bottom is literally when the last optimist has given up and sold. That is the bottom. And how is it going to feel that day? It's going to feel terrible. It's going to feel like it's obviously going lower, because otherwise that the last person clinging on to hope wouldn't have sold that day. So that's how it's going to feel when it's turning around. I have a chart as usual if you want me to quickly show it.
And before you pull that chart up, I just want to talk, if you could talk to this as well. As half the people say 4-year cycle's dead, half of people say 5-year cycle, whatever, it's all broken, it doesn't matter. But then they look to the past, and we'll talk more about drawdowns later. But if you could reflect here where we go in terms of bottoms and drawdowns, and why also that it's not the same as previous cycles, that's, I think, very important. Then we'll get to CTO or to Marty after that as well. So let's pull up the chart. Tell us where the floor is.
Yeah, so in my way of navigating this market, I try not to predict that. I try to react when it's actually turning around. And that means that, and I'm not saying that's the only way to do it. I'm just offering that perspective to everyone watching here. And then you can, combine the different models and try to get something that is hopefully better than all the parts alone. But so this is just showing the trend, and the trend is still down, and it will be down on the day that it bottoms. This will never catch the exact bottom. It's just showing that the trend turned down in October at 108K, I think it was, and it's still down. It hasn't turned up yet. On the other hand, we won't know on the day of the bottom that it is the bottom. The trend will not turn up that day. It will turn up later when it has kind of moved up a bit, and then hopefully we can catch most of the uptrend. So what you're asking here, James, is what about the previous cycles and the previous drawdown? So the previous dips were deeper. Like the last one, I think it was 78% from here, from top to bottom, 77, 78%. And we're not there yet. We have gone down 52% from top to bottom in this cycle. You can kind of see it in the picture that this is less than from here to here. But on the other hand, sorry, the top to bottom was from here to here. So that's 52%. So it's not gone as deep. On the other hand, the move up, I have to switch candles here so we can see it on the same screen. The move up was also less, like the bottom to top here was less than the bottom to top on the previous cycle. So probably, or perhaps, the drawdown will also be less. That's where like the 50% figure comes from, that even though all the previous drawdowns have been 80 to 85%, perhaps it will be less this time. And that's where the 50% figure comes from. But it is speculative. We don't know for sure, like how deep will it go? I don't know either. We just can say that today, this support hasn't broken. It's still holding, like the 60K floor is still holding. If it breaks, I'm not predicting it will break, but if it breaks, the next stop is probably the volume peak here at 40 to 44K. Which is actually, James, where you talked about you focused on two years ago. So, you know, if this breaks, that could come back, but it hasn't broken yet, and perhaps it won't. If it does, we won't miss it, you know, that we will notice it. But so far, this is still holding. The 60K floor is still holding.
Yeah. And there are people stepping in, which is a good sign. We'll get to that a little bit later. Marty, what do you make of all of this?
I don't think anything's changed. I mean, in my opinion, we went from 16,000 to we're now at, like you said, at 65,000. That's around 258% we're up, which is still remarkable. I think you have to look at it like that. If anybody came into this asset class thinking they're going to make a quick buck, I think that was the problem. It's a brand new asset class, new software, unregulated. It's going to take a while, and it's actually accelerating much faster than I thought. But we're not there yet. We're on the cusp of regulation. In my opinion, my thesis has always remained. This asset class is designed to store value and create monetary premium. But when you have two closed loops, when you have blockchain, which is one closed loop, which has no idea of dollars, there's no dollar price on a blockchain. And then you have the other closed loop, which is the dollar exchanges, which are highly centralized, unregulated. We've never seen a commodity this centralized ever before. And you know, the problem is people look at crypto in dollar terms. So you have this massive decoupling. And until that's rectified via regulation, and that regulation is enforced, you're going to have a speculation-based market, which means that the incentive of the exchanges is to extract liquidity. And they'll do that by, like you just said, till the last remaining optimist. Well, the way we can actually theoretically, you know, indicate that is until the last person stops longing with leverage. And until they stop longing with leverage, they will just keep extracting that leverage because they can. And so that's what we see here. That's why we see these violent moves. And this iterates what Michael Saylor says. Until these are regulated venues, there's no incentive for the exchanges not to just keep doing it. So they will. So as far as where's the bottom is pretty much when Binance says it is, guys. And they have 80% volume, 80% dominance. They control the market until they don't. And the only thing that can control Binance is regulation. And you can see how contentious it is in the Clarity Act and market structure. It's been fought like wolves. So clearly it's that important. That's my opinion.
Exactly. Between the banks and the centralized exchanges, none of them want this. And that shows you how good it is and how important it is. So, Mando, this is, I'm going to go through 3 slides here, try and paint a picture that dovetails nicely into what Marty said and kind of CTO. I love that all hope is lost when the last optimist folds. But how much of the recent downward price action is things like hedge funds, etc., you know, leveraged Bitcoin, dumping in the open market, people buying OTC, not really impacting the price. And then we have this. This is actually a very positive sign. This is showing you how hedge funds are heavily long, net long. And if you look at going back through history, when the hedge funds start piling in to Bitcoin futures in a big way, that typically marks a bottom. Not saying history will repeat, but you can look at the chart here. Every time we get down to this low, over the last 5 or 6 years, we've only hit this level 3 times. Every single time it's rebounded from this level, give or take a couple of weeks. And finally, and you know Jane Street are jumping big into MicroStrategy. Now, of course, people think, those that don't know what Jane Street does, they are complete aggressive, you know, hedge fund player, and they're probably just arbing the trade between Bitcoin and MicroStrategy as that is their game, or delta hedging or something else. But explain to us, Mando, your TradFi view of this, keeping the pressure lid on the upside price, hedge funds going heavily long. That's for me is one of the most bullish charts I've seen this year. And of course, Jane Street and their game.
Yeah, it's difficult because of just the arb trades that you mentioned. Like Jane Street are not always a directional fund. They're normally looking for arbitrage opportunities, and whatever they're normally doing is very smart. So I don't know if it's necessarily like a huge directional view. But for all the others, it does feel as though, I mean, the people that I speak to in TradFi are really surprised at what's happened to Bitcoin this year. Like genuinely really surprised that it's down to where it is. I think part of this has been the unwind somewhat of the DAT trade / the ETF trade. Like a lot of people came in very, very quickly, and we've seen part of that unwind. But now seeing where it is, like I think people are starting to just get a bit confused about where it is. I think that's what we've been on this show talking about for a while. So you're kind of just left with the ideas of, is this some form of a, as Marty would say, like this is suppression by certain strong actors, or if it's anything more real. And the longer this goes on, the more it feels like, and there's no boogeyman coming out and being like, oh, okay, quantum's about to break Bitcoin. It feels like a good time to accumulate. So I would imagine that TradFi are getting increasingly bullish on Bitcoin here. You've seen that with some of the recent price predictions from the major banks, the major research houses, which are saying this should now start to catch up with gold, just because we've seen a bit of an unwind of a bullish sentiment. I think that will come back.
In fact, the gold and nothing made me more excited last year when I saw gold, and even early this year, gold and silver running. It's like, oh my goodness, that is so good. And I keep on calculating what is the price of Bitcoin if it reaches the market cap of gold, which has been expected for a decade. And now we're at $1.75 million per Bitcoin if the market cap is equivalent. The question is it a better gold? I think so, but we'll see. Marty, another thing that actually happened, market structure and macro. This is kind of a tricky topic, but I think it's worth addressing. And Mando and CTO, feel free to chime in here. But Marty, I know you look at all sorts of liquidity and all sorts of correlations. First, we'll talk about the Fed injecting nearly 19 billion into overnight repo loans. This temporary liquidity boost is not QE, but adds kind of short-term liquidity. Then we had Basel III changes, where physical gold now counts as a top-tier bank reserve. That's extremely bullish for gold. However, Bitcoin is still treated as a high-risk beta asset for banks, and it's expensive for them to hold and is not recognized, which is a huge ding. Will that ever change, first of all? And second of all, if you look at this chart here, this is the Key Rock report, which I think I know you know. The Treasury QE T-bill issuance shows a 0.8 correlation with Bitcoin. The problem is there's an 8-month lag. So walk us through reserves, Basel III, market structure, and this new correlation potential.
Yeah, I think the misunderstanding that people have always had is that, first of all, the 10-10 event, which was such a great narrative, really coincided exactly with the Treasury, their checking account getting drained. And everything went down. And from that moment on, we've had no monetary premium pretty much in Bitcoin. We followed software stock, the IGV. I know, and anybody that opens IGV with Bitcoin, you'll see very clearly, even the weekend move was just preemptively following IGV down. So we've been valued as a software. So why can't we hold monetary premium? And I think it's because people have lost faith, like Mando just said. I think once people have realized what we've been saying a long time, which is the price of Bitcoin is decoupled from the actual blockchain, then you lose faith that it can store value. And I think that's what happened. So a lot of people sold because they don't see it storing value, and it lost its monetary premium and followed software, which is just being valued as the software it is, which isn't bad if you look at 16,000 once again to 68. Now, this is the interesting part. First of all, there's a lot of movement in liquidity. Bitcoin is the most sensitive asset to liquidity. It literally is liquidity. So when people need liquidity to cover margin calls, when they need money, the first thing they sell is their crypto. It's that good because that's actually its use case. It's unbelievably fast and accessible liquidity. So when the Treasury, when they ran out of money from the government shutdown in October last year, liquidity was drained from everywhere it could be in order to pay critical bills. And it came out of crypto. It came out of crypto. It came out of software stock. It came out anywhere it could. And that was where we are now, in my opinion. The good news is the QT is over. We're starting QE. If you look at the Treasury auctions this week alone, in fact, today, 23rd, and tomorrow, 24th, $1/3 trillion in T-bills will be auctioned. So there is a strong Scott Bessent strategy to bring and issue new liquidity into the system on the short end of the curve, which is T-bills, short-term, 13-week, 26-week. And what we found is that goes into stablecoin. So the new correlation that I'm tracking really now in our recovery phase, once we've drained all of our monetary premium, all of our liquidity, is stablecoin issuance. And we're sitting at about 308 billion right now. We'll see how much percentage of this new liquidity in T-bills rolls into stablecoin, and stablecoin ultimately rolls into crypto. Once it gets issued onto that closed loop, it tends to stay there. So these are going to be interesting times now. I'm very excited, actually, James. You can tell. I've been waiting very patiently for these levels, because now we can actually start to see, the transition from a liquidity drain into a liquidity insertion, the injection of liquidity. And if you
and I've been looking at stablecoin market cap and correlation to Bitcoin for a long time. We did hit 320 billion. Maybe CTO has a chart in that, and then it tanked all the way down to about 303 billion. And it's making a slow recovery right now. But that was always the fuel that drives crypto.
I did a little math. You want to hear the math? So based on 308 billion in stablecoin now at a price of 66,000 Bitcoin, you come to a ratio of about 0.00022 per dollar of stablecoin to each Bitcoin. If you extrapolate that out and go with JP Morgan or Morgan Stanley or Standard Chartered's estimates, even Scott Bessent said it, roughly 2 to 4 trillion of stablecoin will be issued on chain through T-bills by 2030. That's 4 years' time. You can extrapolate out that, like, the bear case is probably Bitcoin at around 400, and the bull case at 4 trillion is roughly 880,000. So these are good measures of where Bitcoin is going based on T-bill issuance.
Mandu, you buy into that fuel and those targets for stablecoin balances in the trillions?
Easily. I think what you are seeing is that crypto is replacing the payment rails across so many different things. It's going to be under the hood. People won't even realize it, but there's no issue with crypto adoption, particularly stablecoins. So I think stablecoins into the trillions makes sense. Governments, it makes sense too, to be kind of supportive of this, because as Marty said, like they're now like the number one holders of all the different government bonds, or at least they're going to be, particularly in the US. So the US has got this is the way to dollarize the world in this new economy. So it seems like an obvious way for them to continue to push the strength of the dollar.
Interesting. Let's talk about this, because one of the intersections as well, not just stable coins and the market and the new TradFi rails, but also the intersection of AI and crypto. And a lot of people, including myself, come up with, we know AI is changing everything. We know the demand for crypto-based payments is the only thing that can fuel AI agents. AI agents don't have social security numbers. They can't open bank accounts, etc. But they can pop up a wallet very fast or access one. But in this crazy, abundant world of AI, why would AI agents ever covet scarce Bitcoin over something that they can create that's more efficient? This goes back to the speed. So anybody wants to take this is kind of where people get tripped up. There's no way 15 TPS or Lightning can handle the quadrillion payments that need to be made every week, and that future is coming pretty fast. Is there a play for Bitcoin here? Anybody? Technologists, CTO?
Bitcoin is not going to be used for payments in its current form, I don't think. I think payments will be stable coins for the foreseeable future, because it's more value stable and it's faster and cheaper to send it. And also potentially easier to manage in legacy systems, accounting and so on. So I think so. Then the question is, will we ever get another blockchain? That's really the question here. Could we get another blockchain even better than Solana, even better than Sui, and so on and so forth? Of course, that can always happen. We cannot know that for sure, but it's not enough to build the technology. It's not enough to build the product. That's the thing. Building a copy of a blockchain is trivial today. You didn't even need AI. You just clone the repo and you're done, basically. So, but that doesn't mean that you have any value created, because you also need users, you need leverage, you need the momentum in the ecosystem, you need people developing and so on. And that is not easy to copy. That is not easy to create that kind of momentum. How many tokens we have? We have like 10,000 that's listed on CoinMarketCap, and we have 17 million more that are not listed, and most of them have zero traction. So it's not enough to have like a super intelligent AI agent or a super intelligent developer who build an even better blockchain. It takes a lot more than that. It takes users and momentum, and it's not easy to get because you need people or agents in both ends of the transaction typically.
That's so interesting, Joe. You actually dovetailed into the next part of that question. Okay, so first of all, to summarize, Bitcoin's too slow for AI agents. It's not going to be a payment rail, correct? Second, even if you spin up another blockchain that's better, cheaper, faster, without devs, without adoption, without breadth of dApps, you're not going to go anywhere. But this question keeps coming up as well. Maybe, Marty, you take a crack at this one, and then we'll go to Mando afterwards. But as AI becomes exponentially better at coding, and this has been my fear for the last 5 years, what's stopping some kid in a garage from spinning up a brand new, better blockchain, better, cheaper, faster, millisecond finality, zero fees, etc., from scratch? Could this happen?
Yeah, I mean, I'm not going to be the person that doesn't admit that nobody really knows what AI is going to do. I mean, at this point, the iteration speed of AI is just untenable. It seems like every week there's a whole new, industry being disrupted or new software being created by AI. So yeah, we don't know. I mean, absolutely no. Anybody says they know the answers to the future of what AI can do, they don't know what they're talking about. I don't think we know. But the one thing I do know is the only thing that AI can't do is determine private keys. And the thing that protects value on a blockchain, specifically proof of stake blockchains, other than Bitcoin, is the value of the stake. So you can spin up your own blockchain, but in order to create, economic security. You need value. So the kid in the garage would have to come up with billions and billions of dollars of value to create any form of security for the blockchain. And a lot of people don't understand that. When we're looking at fundamental value of a blockchain, we start to look at how much value is stored on the blockchain. The market cap of the stake, the native tokens, should be at least 1-to-1 parity with the value stored on the blockchain. And right now, those are drifting under 1-to-1 parity. We see that towards in the bottom of these bear markets, we start to get less value securing the value on the networks, which is usually for me a really good bottom signal when those drop. Like Ethereum is extremely under. If you take the value of stablecoin, which is actual dollar treasury liquidity on Ethereum, and you add all of the sort of bridge tokens on Ethereum, so all the projects that have made ERC20s and their value, then the actual value of the Ethereum stake is actually less than that right now, quite substantially. It's about 0.294 last time I looked, which means it's quite insecure. Solana actually was around 1-to-1 at $82, but at $79 where it is right now, it's also drifting a little bit under its stablecoin and bridge token value. So you can see those are very good indicators of the bottom as well. But that's the important part, is you can't just make a blockchain. I think that's a misconception. A blockchain is not just something you can make. You can make the code and you can run it on your machine, but to get it to be adopted and to create a sort of a safe economic store of value requires value.
And network effects as well. The old Metcalfe's law.
A very wealthy institution like a JP Morgan, they try to make Onyx. They made their own blockchain. It failed because they couldn't get adoption. They had obviously the liquidity, but they couldn't get the adoption. So you need the liquidity and you need the adoption. Now, can AI create liquidity? Now, what's interesting is an AI agent may create an unbelievably clever trading bot against the S&P 500 and start to extract liquidity just like Binance does and accumulate $1 trillion and create its own. You don't know what's possible. AI could do something out of left field.
Well, we
so
do.
I'm not going to say no.
Yeah.
One thing. Bring the
one thing we do know is risk happens fast and change is happening at an unprecedented rate like we've never seen before. This is a great question. There's two things. I just went to my little model online. It's hard to believe that not just we're talking about new chains coming over and taking over. If we look at existing chains that have been around for 8 years or 10 years, like Cardano, I'm looking at the daily active users, 849 people on Cardano, 6 million on Solana. So the old chains that supposedly were supposed to have network effects have none anymore. People have just left and fled. And then you have new chains, Mando, like Layer 0 coming out saying we can do 2 million TPS, I'll go up in the ante on 1.2 million TPS from Firedancer on Solana. But again, what is, and they won't have a token as far as I understand, Mando, as well, Layer 0. But a lot of excitement out there, a lot of people concerned with their Layer 1s. What do you make of all of this and how this also dovetails into this world here, the AI agents and stablecoin commerce? And as I mentioned last week or the week before, I don't even remember, I said, AI agents and AI could actually be the savior of Layer 1s, because the path to onboarding 1 billion people is way harder than bringing on 1 billion AI agents. Tell us what you think.
There was a really good tweet actually by Toli, who said like 3 or 4 years ago, it was, if your blockchain was made up of AI and bots, everyone would be complaining. And now everyone's saying, if your blockchain is made up of AI and bots, it's amazing. It does feel like that way. Like the number one users of chains are probably going to be agents now and bots. Do I think that we need more block space necessarily yet? I don't think we're at that level yet. I think Solana can do most of what we would ever need to do at this stage, potentially like 1 or 2 other L1s. But yeah, I think what Zero is doing is interesting. It helps some of the cross-chain issues that you have with L1s. But right now, I'm not looking for more L1s. Let me put it that way. I think we have enough block space. I think we have enough throughput. I think that the developments that you're going to see from the major chains will mean that we'll be able to deal with it if it ever gets to that sort of a level. I don't see a lot of demand right now for a faster L1 than Solana.
Exactly. And I see agents actually, rather than build their own chain, they'll plug into battle-tested L1s and they'll look for things that are ultra fast, ultra cheap, and they'll be able to sniff that out instantaneously for these micro payments. And even hiring meat puppets on the street, as they say. So anything else to add on this? Because
I can add a little bit. I think that, in my opinion, that the blockchain, these Layer 1s were always designed with this in mind. If you look at, let's just go there. If you look at Sam Bankman-Fried, who was a really good investor, not a great CEO or manager, but a really good investor, he invested in Anthropic and Solana. Now, why did he do that? This convergence has always been known, that these L1s would be the sort of economic infrastructure of agentic finance, right? So, because AI agents aren't going to use ACH or checking. They're not going to use fiat. They're going to use some kind of digital value, some digital rail. And this is it. We invented it. That's what pretty much crypto is. So I think there's a convergence, in my opinion, around April. It just seems like obviously we need market structure in order to store monetary premium in crypto and to create sort of an honorable market. So it looks like, according to Brian Armstrong and any of the representatives or the senators, it looks like April is around when that's going to pass. At the same time, we have the CME going 24/7, also rolling out in April. I think those things are very much happening in tandem. And then you have sort of things like Alpenglow, the Solana update to go to under 200 milliseconds. You have a lot of things pointing towards sort of regulatory clarity, US markets going online, and agentic technology all sort of coming together around April. And that also times right with the midterm ending and things like that. So in my opinion, this was always the plan. I think you've been narrated, to and fro and like a river of narration along the path. But ultimately, I think the technology was always built for this, for agentic finance, which I think humans were great test users of blockchains, with our 3,000 TPS, things like that. And obviously on XRP and ADA right now, maybe 10 people use it. But if you look at Solana and things like that actually were tests, actual users around 3,000 to 4,000 transactions. Agentic finance, potentially hundreds of thousands an hour. So I think it's a whole other world. And once again, I don't think we really know the effects, what's going to happen, but we sure need regulated markets. And thankfully, that's around the corner.
And there is another catalyst we have in our back pocket, not just AI agents, but also real world assets and the tokenization of everything. And that's happening really fast. If you look at the growth rate in users on tokenized stocks, just so far year to date, it's nearly doubled. Mando, you've been tracking this as well? Real world assets and tokenization of everything. How big a narrative is this compared to AI agents? You might be muted.
I think they can go hand in hand, I think, arguably. Right now, tokenization has come before AI agents, in my opinion. We've seen a huge growth of HIP, which is a hyperliquid protocol for use. And then we've seen a number of the exchanges start to tokenize and offer trading in these sort of products. And it's actually forcing, I think it's going to force TradFi into this sort of 24/7 model that we have of trading. You've seen
already happened with CME futures last week. Yeah,
I think this will happen across the board just because of the amount of money that can now flow along these sort of rails. So I think it's going to be a big deal. And then the agentic stuff, well, once you have everything available to trade tokenized on chain, then the idea of you being able to spin up agents to do that for you, I think, is the next step. So I don't probably see that being here, at least at the scale that people expect, maybe until the end of the year. But I do think it's definitely coming.
CTO, what do you make of all of this real world assets and layer ones and threats and AI agents and maybe Elon Musk's money, X money?
Yeah, I'm extremely bullish on the usage of all these use cases. I said it before, I think the tokenization of the real world assets is, people don't understand how great it will be until they start doing something with like the TradFi way of managing assets, stocks, and traditional products. It's a mess. And it's built out with a myriad of old systems, and it's terrible. And then contrasting that with putting the same asset on the public blockchain, which you don't even need to operate, someone else operates it for you, and the cost savings must be in the factor of like 1000x. Plus, you can trade it 24/7 and all the other benefits, and you get additional market to your asset and so on. So of course it will happen. Of course the tokenization will happen. It's fantastic. And Larry Fink and all those people, of course, they understood that years ago, and that's why he's been out talking about it. And I understand why he's talking about it, because the benefit is amazing. And even if we didn't understand it, perhaps he knows better than most people that it's good. So that will happen for sure. And then all other, the stable coins that are running on Solana, the AI, and so on and so forth. So why isn't the price going up? That's the question here. And I think that it's good to realize that in crypto, the use and the token price doesn't necessarily need to go at the same time. Because it was at some point in, I think, 2018, I saw a tweet where someone had calculated. At that time, we didn't have Solana, so it was Ethereum at the time. But the person had calculated, like, if people only bought ETH for the gas, what would price of Ethereum be? And of course, there was a bunch of assumptions, but bottom line was that instead of, hundreds or $1,000, it just need to be a few cents. Because if you just bought ETH when you needed to send a transaction, you don't need to hold that much. So there would be plenty of ETH for everyone. There wouldn't be any scarcity. And it's the same thing for Solana today. If we look at ourselves, how much Solana would we have held if we just needed to pay for the gas fee? If we just bought the Solana the day we needed to pay for a transaction or the minute before, and we just bought the 0.001 Solana we needed to send that transaction, we wouldn't have bought much. So the price didn't need to be that high because there would be plenty for everyone. Fact is that we buy Solana or other coins with an element of speculation. We buy it because we believe that price will go up. And generally, I think it is the case. Like when something gets used, it gets more attention, it gets positive momentum, people do buy it for speculation and price goes up. But we can have this disconnect. It's not like a stock where we can calculate the price and price will never drop below that. It can drop below it, even though the network is used and it's very valuable. And I think that's a period where we're seeing here now because the Bitcoin is going down. So then all the altcoins go down, including Solana. And usually the altcoins go down more than Bitcoin does when there is depression, which we have now. So I think that's the explanation. Solana is doing great from a usability perspective. And when a positive market momentum comes back, probably the price will catch up as well.
Fact,
but we can have this period of disconnect.
You land on a very important point because people are confused, CTO, as to why. Well, first of all, why isn't the price going up? And second of all, why would it? Well, one of the reasons is every agent action will pay fees in Sol, and 50% of those base fees are burnt, which shrinks the supply. So if this thing really does take off and we get to a quadrillion transactions a week, that results in higher staking yields, more Sol locked, growing usage, real demand, and the whole flywheel that kicks that in. So that's an important point that people sometimes miss. But the other thing that's interesting regarding real world assets, I just want to take, I always look to friction in the traditional world. If you're trying to sell a home in California, selling a home, you'll pay 8 to 10% in fees to all of the people feeding off that transaction. Your title escrow fees, your transfer tax, excise taxes, brokerage fees, real estate agents fees, etc., seller concessions. It's crazy. If imagine a world where you can tokenize your real estate and you can transfer it on the blockchain, all these fees go away, or a large chunk of them. And that is just one example of a use case. And this is what also TradFi is very worried about. And the Clarity Act with banks, they're worried about losing their gravy train of deposits. But anyway, enough of that. Let's talk about Saylor, Bitcoin, and Quantum. Two things he said this week that were quite interesting, and they bought a little bit more today as well. On quantum risk, he says there is credible risk, but it's seen as 10 plus years out, which is very true. People are still fretting about that. They shouldn't be worried about that. There's bigger issues. And then he spoke about drawdowns, which is interesting. He did talk about, returns aren't what they used to be, but also drawdowns won't. And he believes that drawdowns, the extreme booms are gone, but also are the extreme drawdowns. And he sees this new world not 80%, but 40 to 50%. And as you mentioned earlier, CTO, we're down 52%. So there's no more lottery upside, Mando, but there's also limited downside. Do you buy into this? I don't think we need to kick quantum to death anymore. It still is enough to scare some people, but it's not a concern.
It's not a concern for me anymore. Not at this price. I think maybe it was a concern at 125K that could be something that was a headwind. Now we've dropped 60K. I think people have got to start producing some real reasons why we need to be worried about this very, very soon. And you've started to see that price move potentially has caused people to start to act a little bit more, which I think is important. So I'm not saying it's a zero risk at all, but I feel like we've just been discounted quite a lot for it.
Good. Anything, Marty, to add on this and Saylor's comments?
Yeah, I think this is the most important comment of the entire talk today, that Saylor has finally come around to the same thesis that we've been talking about here for years, that until we onshore and regulate crypto markets, the dollar value of crypto, it will remain a risk, an untrusted lottery, speculative market with these massive drawdowns we know are chasing leveraged longs and leveraged shorts in both directions. So I'm happy that Michael Saylor has finally accepted this. So hopefully it's from reading my Twitter feed, honestly. And that's why the Clarity Act is so important. That's why there's so much hostility there to get the markup right. This is literally, you got to ask yourself, who doesn't want regulation? The exchanges.
Yep.
The exchanges are making a fortune liquidating traders. Why would they want any change? They're going to milk it till they don't have to. So regulation has to come from, the regulators. And I think it's getting there. You can see the fighting, the compromise. But at the end of the day, Michael Saylor is obviously getting more vocal. And the fact that he said this makes me very happy.
And in fairness to Brian Armstrong, though, he is defending the Clarity Act. So it's not all exchanges, correct? Or is he speaking out of both sides of his mouth?
Well, Coinbase is a regulated exchange. They're a publicly traded company. So they are absolutely regulated. They're probably getting hurt the most because the price coming off Coinbase, you know, if Coinbase says the price is 70,000, literally, guys, understand. Let me just go right now. Let's get some perspective. Binance's 24-hour derivative volume is 52.19 billion. The second place is OKX, is 23 billion. Binance is 2 times higher than OKX. Coinbase is not even on the top 10. It's on 15, 5 billion. Hyperliquid, 4 billion. Binance controls the price of crypto. I've been telling you this for years and no one believed me. Now finally people are coming around. Until Binance stops controlling the price of crypto, they will continue for their own reasons. And their reasons are they extract liquidity from leveraged traders. That's their business.
Yep.
Okay. Now, whether they use that to propel it higher is the next question. And that's obviously we'll have to wait and see. But Coinbase absolutely is a victim here as well. You know, their price is instantly overrun by the dominant exchange. Remember, prices come off exchanges, go into these Oracle networks, Chainlink and Pyth, and then iterate across the entire ecosystem. So whatever dominant price comes into the oracles will become the price. It doesn't matter what Coinbase says until they have more volume. And the same is true for the CME. The same is true for IBIT, etc. We need more liquidity to compete with Binance's liquidity. Their volume is just extraordinarily much bigger than anyone else. So all of this clarity stuff, in my opinion, is to try and rectify that problem, to try and push them out of the market so that we can get an honorable, loyal, trustworthy price of crypto.
Yeah, Mando, do you believe one of the fears I have is the Clarity Act will be so bent out of shape, it will no longer have any value because of the special interests? Do you believe that's a possibility?
Yes, obviously. I think there is some regulatory capture here by even the biggest crypto firms, I think. I don't think this is going to come out what everyone hopes, basically. No. I think there's going to be, never is the case with a bill like this. There'll be certain things, but then we'll adapt. I think this is going to have to be some good things in here which push tokenization, potentially even push stablecoins, but maybe people will just work out ways to make money from it in a different way. Like, it's going to rug some people, I'm sure, but I still think it's good to have this. I think if we don't do it now, we won't have it we could maybe not even have it this decade. So I think you've got to go for it.
Exactly. Good point. Another thing that has some people alarmed, and you just see the headlines, Bitdeer. They dumped their entire Bitcoin reserves. Holdings dropped to 0. They only had 950 Bitcoin, everybody. So it's not like they had 50,000 or 100,000 Bitcoin. It's a small amount. But what is interesting is they're doubling down on the pivot to AI. And so are Marathon. Marathon just bought a French infra AI company called Exion, which is interesting. They're global plays. They're doing things in Africa and across Europe, etc., on their pivot to AI. CTO, the miners provide the security to the Bitcoin system. Does it concern you that many of them are now pivoting hard to AI, and some have been for a couple of years now?
I mean, when price drops in Bitcoin, there tend to be miners switching off the equipment and doing something else for a while. I think they will come back when price goes up. It kind of makes sense, right? Because the business case for most miners depends on that price is going up. Like, they will keep mining capacity will be kept adding to the network until it's slightly unprofitable. That's the economics of the Bitcoin mining. So for that business case to eventually work out, price has to go up. That's when it becomes profitable in the end. And when price is in a downtrend now, maybe they just take a slightly less risk approach to the business and wait for the uptrend to come back, and then put money back into operating the Bitcoin mining. So I'm not too surprised. It doesn't really concern me.
Yeah, and the cost to mine is 77K. So basically, if you have your rigs plugged in and the Bitcoin price is at 65K, you're losing $12,000 of Bitcoin. And that's the simple math behind it. So yes, I think it actually is a saving grace for Bitcoin miners because it gives them flexibility, optionality, how to use their power. And we know that at the end of 2026, the one bottleneck will not be semiconductors or chips or GPUs. It'll be power. So there's going to become a time where these data centers like Meta and hyperscalers, etc., will be knocking on the doors of these miners and say, please, sir, can I have some power? Sorry. Old reference to the past. Anyway, let's move on. Sorry about my bad. Let me see. Bitcoin Solana again, Mando. It seems like whatever you and I say causes a little bit of consternation. I do believe I made a video, and I do want to talk about one thing: is risk of crypto. Bitcoin is the least risky, and there's a risk curve. The more you go out, I had Near Protocol up on here, and that caused a lot of consternation as well. But I do believe Solana is riskier than Bitcoin. But when I ask myself a simple question, which will double first? Bitcoin at 70K, now it's 65K, by the way. This is from a week ago. What will happen first? Will Sol at 80 go to 160 first? Or will Bitcoin at 70K go to 140K first? Both doubling. My gut tells me it's far easier for Sol to double before Bitcoin does. Thoughts, Mando?
I'm going to repeat the same answer, man.
Yeah, I know.
I'm
People
still a
like when we
Bitcoin
fight.
guy. I think what I just described, which is what I think could happen here, which is deflationary impact of AI starts to really be felt. I think the result of that will be massive money printing, and I think that is going to have a very strong demand for Bitcoin eventually. The use of L1s by these agents, I think, could be absolutely massive. I'm still just a little bit worried about like generic L1 valuations. I still just feel like they are everyone's trying to work out how to value them still, and we haven't really come to that right metric. Hyperliquid is very easy to value, but for the others, it's more difficult. And I think as more and more things have moved on chain with tokenization, it's meant that value proposition has been less strong. Like people don't necessarily just want to buy an L1 when they can buy any other asset in the world right now. So I still think that other L1s will underperform the Bitcoin gold narrative. It hasn't happened so far though. Like Bitcoin dominance has stayed around 58, 59, which has surprised me.
Yeah, it's interesting because I do have like 60 ratios across all of crypto in an attempt to value them. Let me just try pull up one slide real quick. But while I'm pulling this slide up, CTO, what do you think of this? Bitcoin the safer horse?
I mean, I generally try to not predict the future of markets, but I think one aspect that maybe I can add here is that when talking about this, which one of these could double and so on. So we're talking about risk and we're talking about upside. Generally, the upside in altcoins is bigger. Like if it doesn't take much, if Solana gets some momentum back, it doesn't take much for it to go 2, 3, 4 times up, while it probably takes more for Bitcoin to do that. So that's one aspect of it. Right now, I mean, the question here, will this one or that one go first? That is the SOL to BTC chart. And right now it is down. I mean, there's no two ways around it. The SOL to BTC chart is trending down. But if it turns around, it can quickly snap back high and fast.
Yeah, that's my play. Anyway, the good thing is the internet's forever. This is a crazy stat as well. This is the market cap per transaction. You can do the market cap per user. You can do the market cap over fees generated per day, all that type of stuff. But you see the ETH is valued at $135,000 per transaction, and Sol is $400. That is a discrepancy, and we just broke a new all-time low for the actual value per transaction. It was $500. It eclipsed that for the first time a week ago. Now it's $400. So it's just getting absolutely outrageously cheap. And you compare that to something like Cardano with 450 transactions a day, 800 users. It is wild. Anyway, enough of that. I try and appraise crypto the way I'd appraise a stock or anything else. Let's get back to the story. Unless, Marty, you've got any thoughts on the doubling. What will double first?
I've got thoughts. I think that the misconception is that retail has anything to do with this. I think it's all about institutions and adoption. So if you believe that Scott Bessent will issue more stable coins onto Solana, if you believe that tokenization is real and everything will be tokenized, like Larry Fink says, if you believe that agentic finance will be a real thing and AI will participate in the economy, then you can believe there will be more stake bought to run more Solana validators. And with the advent of Alpenglow, Fire Dancer, they're going balls to the wall to build even better validators. If you believe that there's not going to be a massive accumulation of SOL to spool up more validators from all these banks and institutions, they want to participate in agentic finance, tokenized equity, tokenized bonds, and stablecoin economies, then you should assume Solana is going to go up, because, as I said, the price of the network is equal to the price of the economic security. So the larger the amount of volume, the larger the amount of value on the network, the more value in the stake. Now, I must caveat this. I don't believe any pricing right now until we pass Clarity Act. Until we pass Clarity regulations, I don't believe any dollar pricing. I think it's casino-based pricing right now. So let's get there first. So when you say, do you think BTC will double? Well, that's monetary premium. If you believe that liquidity is coming, like Mando just said, if you believe that they're going to print money, then BTC will go up. If you believe in tokenization, agentic finance, and stablecoin, then Solana will go up. Which will go up more? I don't know. I think they're both going to go up. I truly believe that these proof-of-stake networks may have more ultimate value than Bitcoin. I've always said that. That doesn't say I don't think Bitcoin will go to 250,000. But I think when we see agentic finance together with stablecoin, together with massive quantitative easing or treasury bill issuance, I think you're going to see unbelievable appreciation of these proof-of-stake networks with usage. And once again, caveated, you won't see it until they pass regulation. If they passed regulation today, if they stop the liquidation hunting from these casinos, I believe Solana would double very fast. Bitcoin is going to have to gain some trust. I think it lost a lot of trust from 1010. When everyone saw the Binance glitch and that long candle down, everyone realized that this technology and the sort of plumbing was not ready to store that amount of value. And I think that needs to be proven back to BTC people before they come back in large scale. So there you go. That's my thought.
Awesome. Final point. This is a topic I had last week. We didn't have time to get to it. And for those with kids, or for those who have an eye to the future, we saw, SaaS software companies been destroyed so far, 2026. Last week, we saw security companies like Palo Alto Networks, etc., be destroyed. What do you tell your kids that are thinking about education, third level education, university, etc., in this, for 2030, looking at to 2030? I'm going to start with you, Mando, first as we wrap up here. Don't forget links below for all these legends across the board. Mando, it's very, very tough. How do you position your offspring for the future world?
Yeah, it's a difficult one. It's very, very difficult, because I do think the marginal value of intelligence is seemingly trending lower.
Yeah.
What I do think, though, is that lots of other human skills are going to trend higher. So I think being a good communicator, being a good leader, being a good problem solver, I still think is going to be important. But I think those more human-based skills weirdly become much more valued. They've called it the age of the jock, right? It was the age of the nerd, now it's the age of the jock. Like, we're going to swing back to natural leadership or other like human-based skills suddenly being valued more. I don't know if I fully go down that sort of a route, but I do think that just being smart is no longer going to be enough. because if you think you can just be in isolation a coder or good with maths, those sort of values I think can come down a lot. So yeah, I think seeing the world I think is very important, like actually understanding the context of the world that you live in, having very good communication skills, still work on problem solving, I would still say, and other human-based skills. So I would get them more into interacting with other people as much as possible, rather than necessarily interacting with the computer.
Yeah, a funny stat I saw last week was in Tennessee, if you're a HVAC person or electrician, you make more money than an attorney down there, which, you know, is what Charles here says as well. There is a stark reality coming, and as you said, Mando, the cost of intelligence is going to zero. Marty, thoughts on this?
What do you? Question, James. It's a really great question.
Yeah.
Yeah. In my opinion, I kind of sort of broke it down once. I used the following terminology. I think the value of knowledge has gone down. Obviously, just knowing things no longer is valuable. So the typical university curriculum or school curriculum is really just trying to make you memorize facts. I went to school. It was all about get it all in your head so that when you sit down in the exam, you can remember it all and write it down. So that value is gone, I think, or trending down quite rapidly. So the value of knowledge, I call it the VOK, is going down. Then the value of experience, I believe, might go up. So if you can't cheat time. To have experience, no matter if you have 100 AI agents, to know, what tends to happen, to have life experience will always be valuable. So that is neutral to up. The value of creativity, I think, is going up because AI is very good at deduction, data analysis, and analyzing patterns, but it's not very good at creativity. I think humans will always be involved in, the sort of high-level invention. And in AI is very good at making that real or reproducing it, etc. So I think the value of creativity might be going up. And I always talk about it as potentially a return to a renaissance. We may be going back to a renaissance. And if you look back at the previous renaissance, it happened at the very similar point in the cycle where, like Elon Musk says, massive productivity from AI might make money irrelevant, might make work irrelevant, right? Universal basic income, which people are so scared of, but it might be what they want because it means you have more time for spirituality, health, family, art, expression, grounding, yoga. Like we may be happier. So I think it's a very interesting question. I think there's a lot of fear mongering about those possible destinations. But in my opinion, I think that it might be what people want. I think the definition of life as work was drained into us and imprinted from the Green New Deal and the Eisenhower era coming out of the wars. But I don't think people are happy with a 9-to-5. I think people would be much happier with, let's grind and more time for themselves and their family and maybe happier. And so then, you just have to, layer over, well, then where do you get money? But I think the solution to that will be massive productivity gains in AI and compute and Moore's law will make money irrelevant. And I kind of agree with Elon Musk. Yeah, exactly.
I don't. That's one where I don't agree. CTO, over to you. Thank you, both Marty and Man. Don't forget links below for these legends. CTO, I know you think a lot about this.
I do, yeah. So I think there's two cases. If people want to live like an ordinary life, I think there will be plenty of opportunity. A lot of jobs that are still needed. There could be some UBO or something like that as well. So I don't think it's hopeless. If you want to live an extraordinary life, the situation has changed. The age of the career, in a way, like that is dying, I think, in many ways. Like before you could make a career by being very knowledgeable and very skilled in one specific area. I think that is going to get more difficult for sure. So in that category, you have to wake up each and every day and build assets. One way or another, you have to build some kind of asset or learn how to build assets, because an asset is something that AI can't copy. You can't copy, an AI can't wake up tomorrow and clone James audience, for example. So that's one asset that you have. Your trust, all of you three guys here, you have built up trust. People trust you. That is not something that you can copy. Capital is the most obvious form of asset. AI can't go and copy someone's assets. So the money, like the capital you have built up, that's another form of asset. And when you start thinking about it, there's actually many kinds of assets. Friends, contact network is one kind of asset, for example. So there are many kinds of assets. So I think that that's the change. Cannot just build a skill, at least if society can educate you with that skill. They don't really need you because they can educate the AI instead. So that track is dead. Now, I don't think that means that going to college or university is meaningless. I don't think so, because you practice your brain there. You kind of learn to think logically, you interact with other people your age, so you develop social skills. And I think it's still valuable. And I think, for example, technical university can still be valuable because you learn to think logically.
Yeah.
And more social, humanitarian subjects can be valuable because maybe you learn to understand people, you learn to interact with people.
Yeah, and that's so good you said that. And what Amanda said as well is very relevant, and Marty too. And I remember 20 years ago, 25 years ago, I started to learn about what's called EQ, emotional intelligence. And I was looking at IQ, and I was saying, how come all the people with a lot of IQ are very poor, and the people with a lot of EQ who have no IQ are very rich? And it was like I can see guys worth $250 million, and they're not smart, but they do know how to work people and negotiate and everything else. And even some people who like sell software for millions and millions. So I think that's very important as well, to have that EQ, emotional intelligence skill, which has been lacking in the advent of social networks and everything else. So anybody agree with me there on that final note before we wrap?
I got one thing to add. I think the wealth transfer coming is something that people don't talk about enough.
No.
And I think the value of entrepreneurship is going up. I think if I had a kid, I would teach them, this is the greatest time ever to build your own business.
Yeah. Sell lemonade. Yep.
There you go.
Exactly. Well said. Thank you, everybody. Thank you, these legends. Don't forget to subscribe to them if you're not already watching everybody's channels. Thank you to the great mods in the chat and the whole team for being here. Have a great Monday. Markets are crap all around. So if you're looking at your one asset going down, everything's going down. It's not isolated to your one asset. Nvidia's up though, but that's just AI. Anyway, thank you all for coming. Have a great week.
Thanks,
See you all next week. Cheers.
Bye.
Guys, thanks for having me.